This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, November 10th. In the stock index futures, we are seeing prices lower. This due to economic data out of China indicating that the Chinese economy may be continuing to slow. However, this data basically coming in the form of weaker than anticipated inflation numbers in China, coming in up 1.3% against a guess of up 1.5%. But this actually could be construed as a bullish development in a sense that it means that the People's Bank of China has more latitude to add more stimulus to its economy. So that, from that perspective, would suggest that there may be more support from the Chinese central bank for global equities, including U.S. stock index futures. So what some people are thinking is a net negative, I'm looking at this as a net positive overall. So even though stock indices are a little bit lower, currently I think we can see a move back to higher on today. Also, I would continue to expect that we will see some new historical highs in all of the major indices next year as many of the world's central banks add more stimulus. Of course, the Fed is not one of them. The Fed is likely to raise interest rates at the upcoming December meeting, but whether or not the Fed raises rates then or sometime next year, our feeling is unchanged that we will see new historical highs for the indices with or without a rate increase from the Federal Reserve. Now, moving over to the currencies, the dollar index trading higher today with the dominant influence being increasing prospects of a rate increase from the Fed at the December 16th meeting. All of this changing as far as the probability of a rate increase with last Friday's employment numbers coming in better than expected. Also the probability of a rate increase at 68%, so much greater chance of a rate increase at the December meeting. So that is supporting the dollar index. By the same token, we are seeing the euro currency generally under pressure as it appears more likely that the European Central Bank will be adding more stimulus, possibly at their December meeting. Some pressure in the Australian dollar in light of the weak Chinese inflation numbers. Of course, Australia and China are major trading partners, so that undermining the Australian dollar. And now moving to the interest rate futures markets, some gains in the overnight trade, especially at the long end with the Chinese weak inflation numbers being supportive to the 30-year bonds. However, more recently, this morning, some pressure developing as traders refocus on the probability of a rate increase from the Fed. Also, it will probably be rather difficult for the interest rate futures markets to advance in light of the current mindset that the Fed will be raising rates at the meeting before the end of the year in December. So with that in mind, I think I'd focus on stock index futures to the long side. That market has performed very well. Even on bearish news, we have seen a tendency for stock indices to only temporarily come under some pressure and then come back and advance overall. So of all these financial markets, I think stock index futures is the one to be trading from the long side. So once again, good trading, everyone, and remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.
That's 11314.